All right, so we've now looked obviously at the theoretical side of things, right? We've looked at, those nice fancy diagrams in the previous lesson, but as always, let's actually try and put that, theory into practice and look at the real world price action examples and real world sort of trade examples to actually see how we can use that theory, well, to actually make some money, right? So, hey, hopping onto euro dollar, the pair that we've obviously been using for the majority of these examples. If you've been following along and drawing some charts, hopefully you will have some similar structure laid out. So yeah, I guess let's just look at some random bits on the weekly chart and just start to kind of loosely look at what really is going on with those liquidity concepts that we've been looking at. So for instance, we've had this clear bearish trend back in 2015 on euro dollar. Price then pulled out back to this kind of minor area of supply, right? That took out that minor low, and it's starting to kind of range about, have that battle between buyers and sellers. So as buyers are kind of struggling to push price higher up above that sort of minor supply zone, and we're starting to see sellers step in, right, pushing price down, what do you think is happening? Tons of orders are starting to build up above these highs, right? Because anyone who is short, what are they going to be doing? They're going to be selling, but a lot of them are going to be having their stop losses setting just above these highs here, right? So if you're short and you have a stop loss, that stop loss is going to be a buy order, right? Because you have to buy back your position when your short position is stopped out, right? So there's going to be tons of buy stops from anyone who's been selling, starting to collect above these highs. And then also breakout traders, what they may see is that this is starting to become quite a strong, resistance level as they view it, and they would think, okay, if price breaks up above this resistance level, then that's a very, very bullish sign, and they want to get taken into the trade, right? So they'd have their buy stop order here as well, and they'd be aiming for price and then take them up and into profit. So as price is doing this over a number of weeks, we just have a ton of liquidity starting to build up, essentially just money, right? It's just orders sitting there waiting for price to eventually tap into it. Then what happens? Price runs those highs, grabs all of that liquidity, and all it does is it sweeps it and it fuels the move to then try and come down lower. So one thing, again, another point I want to make very clear is there will always be liquidity building up in the market in all of these points, right? It will be there, and it will likely have a reaction, a sweep, and it will either be a reversal or a pullback once price taps into it. But we never know when price will essentially tap into that liquidity, right? So that's why structure is always king, and this is why we're looking at liquidity last, because we understand it, we understand what's happening when price taps into it, but we never kind of assume or wait for that to happen first. We always react, right? We don't predict. So price grabs all of that liquidity that was building up behind those highs, and it ends up using it to retrace as big money steps back in to push price to close back below those highs there. And then what do? We come down and we take out all of this liquidity, this trend line liquidity that was building up between these ascending lows here, right, as they were getting higher and higher. Anyone who's buying, right, buying these ascending highs, they'll be building tons of liquidity below these lows here, right, for price to then tap into. So price comes into it, it ends up sweeping it, right, it respects some minor demand in here, so then it fails to take out that major swing low. So we pull back up, right, building some nice trend line with liquidity again. We come into supply, it tries to hold, right, it tries to push down, it fails to do so. We have another attempt here, right, we come into more of that wick, we try to push down again. So just like before, what's happening? We're starting to build this sort of resistance level, right, all of these highs here. So as that's happening, there's tons of liquidity in this area. There's tons of liquidity below this trend line, right? So anyone who's getting long, all of their sell stops are below here, or breakout traders trying to sell the breakout of this trend line. Anyone who's short up here, a lot of their sell orders, their buy stop orders, right? Their stop losses are going to be buy stop orders. They're collecting up here. Anyone who's trying to buy the breakout, also buy stop orders. So then what happens? Price grabs that liquidity. Big money then steps in to fuel that move down, and then it grabs the liquidity below the trend line, right? Which then initiates another pullback back into supply, and then the exact same thing happens again and again and again. So every time you get price essentially tapping into liquidity, it is either going to produce a full-on reversal, or it's just enough, right, to just produce that pullback back into supply. Supply is still in control, and then eventually we go. Now, the swing highs, the swing lows, right, those essentially the external sides of the range, right, because price was in this larger weekly range all the way up here, right, or whether you kind of looking at this range here. On the external side of these ranges, behind those swing lows and swing highs, there's also obviously going to be a ton of liquidity. So that's why we've been saying since pretty much the very first basic market structure lesson that when we get that break of swing structure, what do we expect? We expect the pullback. Of course, it's not always just going to happen instantly like it did here. It can go a little bit further, and then we get the pullback. But the reason why is because it's tapping into that external range liquidity. And what do we know? Every time we tap into liquidity, we either get a pullback or a full on reversal. So in this case, it does end up leading to a full on reversal as buyers use that sell side liquidity to then fuel their move to push price back up to the upside. Okay, so let's just kind of just have a look and study what's going on in here a little bit more. So price is obviously pretty corrective for a number of years coming down, and then what is happening that whole time? We are building a huge amount of that trend line liquidity, right, coming all the way down here. Price then comes into this flip zone down here. We have a bit of reaction. What does that reaction do? That reaction then builds up that trend line liquidity, right? Trend line liquidity here. We have that one touch, second touch, even third touch there with that bullish candle. Just get rid of these lines a little bit. What do we also have? We also have these equal highs building right here. As price moves away, starts to move away. So then what happens? Price breaks up, grabs that liquidity there, comes down, takes out the sell side liquidity below that trend line, takes out the external range liquidity below that swing low, right? And then that's enough to fuel the move for buyers then to step in and push price up higher, sweeping all of the liquidity that had built up, or not all of it, but the majority of the liquidity that had built up, right, behind that trend line, behind all of these highs, behind these relatively equal highs here. And there's just literally liquidity everywhere, right? So this is why it's a reasonably subjective sort of concept, and I don't sit here drawing on annotating liquidity everywhere, because it is everywhere. It's more just having key understanding of what is happening every time price breaks a high or breaks a low or breaks equal highs or equal lows or a trend line, and it starts to reverse. We just use that as an extra little additional concept or tool to bring into our analysis, right? So there's no point in sitting here drawing on every single bit of liquidity, because it's literally everywhere, right? But it's just kind of understanding what happens when price taps into it, why it then helps price to do what it ends up doing, right? Because obviously, again, it grabs liquidity above these equal highs, above the trend line. Then that's enough for big sell orders to step in and use that buy side liquidity to then fuel that move to the downside. Remember, for every seller, there needs to be buyers, right? Eventually, then that supply overpowers demand. What does it do? It then takes the external range liquidity below the swing low, taps into demand, and then we end up, right, fueling then that next move and reversal to the upside, right? So on and so forth. Even here, when we had that, we've been talking about this price action a lot, right? The weekly is in this bullish trend between these swing low and the swing high. Price pulled back into demand. It tried to then make that higher high, but then when it started to roll over, right, it started to get that bearish trend on lower time frames, and we started to see that it had failed to take up that higher high. Instead, what it had done is it just swept some minor liquidity behind that minor high to then fuel that move back down below the range. And at that point, what do we know? That this is likely to be a weak weekly low. It's still a pretty significant sort of internal swing low, and we know that's very likely price is going to want to come down and take out that low and tap into the liquidity that had built below that low. So then just as literally we tap below it, what happens? Price retraces. Now, we don't know for certain whether that's going to lead to a full-on reversal and we are going to make a higher high, or if it's literally just a bit of a pullback to potentially sweep some of the liquidity below this minor descending trend line here, potentially tap in some sudden liquidity there, right? Then we've built even more relatively equal lows here. We have external lows there as well, and then that could be tons of liquidity for price to want to tap into, get a bearish weekly trend change, sweep all of that liquidity to fuel a pullback, right? Back into then that sweep zone that would have taken out that trend line liquidity, right? Created that supply that then flipped to demand, and then we can look for shorts in here to then continue what may be a weekly bearish move, right? So hopefully you can start to see how you can piece together essentially just what price is doing is it's just constantly trying to rebalance price, seek where there are orders to rebalance that imbalance that is caused when either supply is overpowering demand or demand is overpowering supply. And we see those big shifts in price action, we then know that it's trying to seek liquidity to rebalance that and get price back to fair value. But remember, fair value is always a moving target, because the minute it's at a fair value, the market's constantly changing. There's constantly market participants buying and selling, and that those goalposts are constantly moving, right? Which is why price moves and it doesn't just stay flat for eternity. So that's the weekly chart. Let's jump down to the daily chart and focus sort of more on the price action that we've really been studying throughout these lessons thus far. So let's actually take a look at back around here, because this is kind of really sort of interesting price action. So daily chart obviously starts to switch a bit bearish here, right? We start to take out these lows here. We obviously sweep that trend line liquidity that was building underneath. We then pull back in to this area of supply, right, what do we have for this area of supply? Just draw it on there. In fact, let me use the boxes just so it doesn't get too confusing with all of these orange lines I'm chucking about. So it's obviously a little bit messy. We have a lot of wicks there with that daily supply zone. You know, you can have the whole range, you can have the pivot. It doesn't massively matter for all intents and purposes at this moment, but more just understanding what's going on with liquidity. So we get that bearish trend change, we sweep this liquidity. What do we know after we get sweep of liquidity? We're either going to get a pullback or a reversal. It's likely to be a pullback in this case because it's now pro the daily bearish trend. So we start to pull back. All right, as we start to pull back, what are we doing? We're building that trend line liquidity for price to potentially target for when it has that next bearish leg. But we're also doing what? We're building inducement, right, in front of our supply zone. So anyone who's starting to sell here and push price down, there's going to be tons of buy side liquidity, right, sitting above this high here. We'll just kind of draw this on with the sort of tool that I tend to use. All right, just to note there's a bit of liquidity there. So then what we were talking about earlier with that theory, right, the school of thought is that because there are going to be a lot of buy side liquidity above these highs, is that big money wants to use those buy orders to sell into. So that when they start to kind of sell in this area, they don't want to instantly get slipped and get filled all the way down here along this level and get a really poor average price. They want there to be as many buy orders as possible in this area to sell into, so it can start to absorb sort of all of their orders before then price starts to move. Okay, so that's kind of the school of thought. Again, I have no real true idea or proof if that's actually what is happening, but what matters more is that if you go to test this, you will see that it does definitely increase the probability of these zones playing out when you see that. So even in the actual leg here, this high here, because it's quite a clean push, right? Remember what I said about clean pushes is typically if there's no inducement in the leg, not always, but typically price will spike those highs and push up a little bit higher and tap into the supply behind it, and then we will go. And that's what happens here, right? You can see if I draw that line across, it just taps above it, taps into the remaining supply within that wick. So this high here was then used as inducement for the the fractal supply above. We've also used this as well. Now we've got liquidity to target, and now we can try and target the external range liquidity below that swing low there. Then when price will obviously break the low, we'll get one or two things. We'll either get a pullback or we'll get a full-on reversal. Okay, so let's play this forward a couple of days and see what happens as we come below that swing low. So already we're starting to react, but we haven't taken out the low. But that's because buyers are starting to step in around here and try and buy that potential double bottom. And then boom, look at that, nice big reaction. So anyone who was looking to get long around here, right, but they weren't sure, now they've got massive confirmation. So now they're really, really happy, right, to get long. Loads of buyers are going to be stepping in here because what are they seeing? First thing you learn on YouTube when you type in technical analysis, nice horizontal support level. It must be really, really strong. Price is starting to move away. And then let's see what happens the next day. If I can get price to go forward, boom, there we go. So it happens in one candle, so it's obviously a little bit subtle. But if we look at the shape of this candle, what does it tell us about the price action that happened as that candle was formed, right, in that day, intraday? So we were up here on the 3rd of November, and then going into the 4th of November, what happened? Price moved down, right? It swept those equal lows, tapped into all of that external range liquidity below that swing low there, and then within that same day, aggressively retraced back up to then finish the day back up here, right? So all that has done, again, really simple, it's just come down, it's swept all that buy side liquidity. Big money has then stepped in, right, against all of those, sell side liquidity below these lows. Big money has then stepped in to use those sell orders, right, to facilitate their buy orders, and then eventually that has massively overpowered demand, and then we have closed back up here. And now generally when you see that, when you see a sweep of equal lows like that, it's going to facilitate either a pullback or potentially a strong reversal. Right, so this is where you have to pair, like always, we can't just use any tools on their own, right? We need to pair them with all of the tools that we've got to kind of give us that knowledge whether we're anticipating price to then break up to the upside, or if it's just going to be a pullback to come into supply to then potentially, just form another lower high and roll over. Okay, so just play this forward, and obviously we now know that price then doesn't go on to fuel and break that weekly high, right? Because it was just a weekly pullback, and this is what you'll often see, right, on one time frames for the next. So obviously from a weekly chart perspective, we had that break of this structure here. We're expecting a weekly pullback, obviously to facilitate that pullback. Generally the daily will either switch bearish or at least get a change of character to facilitate that pullback, and then eventually that will change character again, right? And then that will be in line to confirm that the weekly higher low is now in place, and we're ready for that next weekly break of structure to the upside. Now what you'll often see is when the daily chart, for instance, is pulling back and we're expecting a weekly higher low to form, we can obviously have loads of demand zones down here that are maybe better price in a discount that we can expect the weekly to pull back to. But this is one thing that you'll see is what can often happen if momentum is strong and price doesn't always pull back, is it will build liquidity, right? So it will pull back. It then will potentially build liquidity, say in the form of equal lows like we have here. It will then sweep that liquidity, and then that sweep of liquidity will be enough to fuel the move to the upside rather than price needing to come all the way back down to wherever you may have demand levels in that case, right? So you'll see a sweep of liquidity just like that, right? So as we go along, I'll show you plenty of examples of where that will happen. But that's just another little mini lesson to bear in mind of, you know, sometimes if you're waiting for price to come back to a demand level and then it feels like, oh, we're kind of just rejecting thin air, there's not really much here. You know, maybe if we investigate these sell to buy wicks on a lower time frame, there might be something decent. But generally on this time frame, we're not really rejecting anything significant. We're definitely not rejecting anything significant on the weekly chart. So what you'll often see happen is it will build that liquidity. That liquidity will then get swept. And then when you see that happen, that's a very high probability scenario to then look for buys, right? If you're looking for a weekly high or low, that is, right? Then you see that sweep, and now we can look to fuel that next move there to the upside, okay? I mean, loads of retail patterns. This is happening again and again. There's something called a head and shoulders pattern where essentially you have the left shoulder, the head, the right shoulder here. We get the break of the neckline. Then traders will either sell on the breakout of that neckline, right? Or they'll look for the break and retest back into that neckline, right? So then tons of sell supporters will be building up, right? We get another big equal highs here. We then sweep these equal lows, tap into that liquidity, run those equal highs there, right? Anyone who sold this sort of, this retail pattern, that then gets swept for the pullback, but it's just a pullback into that demand, right? With those sell to buy wicks, pull back into here, and again, that fuels a move to then run these highs again. Run the external range liquidity, start to pull back. It's the same thing again and again and again. So yeah, sorry, you're probably very bored of my voice saying the exact same phrases, but yeah, it's just what happens, right? And we just need to drill this into our subconscious. And then you probably remember the example that I posted a screenshot of in the previous theory lesson, right? When the daily started to switch bearish. So what happened? It came down into the daily low. It started to have a bit of a reaction, right? It started to build those equal lows. So support and resistance traders think this is a strong support level. They get long. Tons of sell supporters start to build below here. Price then taps into that liquidity just to fuel the pullback into our flip zone, into our supply zone, to then fuel the next move again, right? Even here you can see, right, support level building up, right? Price comes in, it wicks away. It's just building more liquidity for price then to tap into and pull back, right? So we pull back into our supply zone. We are playing within that daily swing high and this daily swing low here. So obviously there's a lot of selling pressure, price coming in, people trying to sell this, push this down. We even come up to here where we almost have that then triple top with this bearish candle. So what do we know? There's tons of buy stops sitting above here. Price then grabs that liquidity, right? Intraday, it grabs it, oh, big bullish move, but it closes the day back down here. So whenever you see that, a big sweep of the highs, right, is pro the bearish trend. We want to be trading away from the sweep, right? We always want to trade away from the sweep. We don't want to see a sweep like that bearish sweep, and then we don't want to suddenly start. We do not want to then suddenly start to buy into the sweep, right? Because what that is it's a very bearish sign at that point. It's grabbed all of that liquidity to fuel the next bearish move. So like here, if you see these lows and then you see price sweep the low and then retrace, we want to trade away from the sweep, right? With price. We don't want to trade back into that sweep, right? You don't want to do that. You want to trade away from that price action that has happened, okay? So that's that exact same thing. Equal highs building, grab the liquidity. We obviously have trendline liquidity here building, right? People buying the bounces. And then what happens? Price taps into that liquidity, right? Fuels it just for another pullback. We always generally get a pullback after a sweep of liquidity, a sweep of that external low, pull back into here, and then that is enough to fuel the move to the downside, right? So on and so forth. I mean, even here, right? Trendline liquidity building up, right? People sell the bounce again on the trend line, another bounce, right? People sell that. Price comes up, taps into all the liquidity that was building behind that descending trend line. There's obviously be liquidity behind this minor daily high there as well. Grabs it, and then that's enough to fuel the move to the downside. What do we get after taking out the external range liquidity there? It's enough to fuel a pullback, right? So on and so forth. Another one here, really good example, is if we take, remember this is that weekly low that I'm just drawing from over here, and we draw a horizontal line across to this level here. Just going to put that on as my daily liquidity line. What happens? Price comes into it. It tries to break the low, but it doesn't quite, and the price starts to aggressively move away. So what do people start to think? This is a really strong support level. Loads of people start to get long here. Tons and tons of liquidity starts to build up below this low, right? That wasn't already, because obviously there would be still a lot below this weekly low here, this weekly low, but this is just going to generate even more liquidity now. Price obviously then sweeps these lows. It's enough to generate a bit of a small pullback, but now there's tons of liquidity for price to target. So then we see the sweep of the liquidity, and then that's finally obviously combined with tapping into all of the demand that is within the zone as well from that initial sweep zone here, which we know is a really strong zone. We now have this inducement in front of it, massive inducement. So we have our big sweep zone, we have huge inducement here, we get a sweep of that inducement, liquidity to obviously target as well, and then that's what fuels that big aggressive move, right? And that is what is going on there. So hopefully you can start to see that now, how we can combine those concepts and that understanding of, just why liquidity gets swept and then why it can lead to the fuel for the big moves. Now, see when we get this break of daily structure here, we're obviously bearish, and then we start to get a pullback. Yes, we can still trade this, of course. We don't have to go, there's a double bottom here. I'm just going to sit on my hands and wait for that sweep. Of course you can do that, and that may give you potentially a higher strike rate. But like I said, right, react, don't predict. If you start to see really nice lower time frame confirmations within here, and you want to start to play that daily pullback, you can do it. You just have to manage your expectations and understand why this then happens, right? So now you have that. It just brings your kind of your comprehensive understanding of what is going on in the market just to that next level. It is not a strict requirement to understand this and kind of be drawing this on your charts. And this is why I try to make a big song and dance about it. Of make sure you get market structure nailed first, right? Just make sure you completely get that. Then introduce supply and demand into it, and then just those two concepts alone will give you everything you need to be highly consistently profitable. Bringing in liquidity concepts is just bringing in that, as we say, that little bit of icing on the cake, just to kind of fine tune things a little bit more, or just to kind of make your understanding a little bit more complete. But if you suddenly start to see this move away, yes, at that point you can go, this is pretty, suspect, especially as we didn't even pip that low, right? We retraced before it. It's very, very likely at this point that price is going to want to come down to sweep it. But you will find sometimes as well where it doesn't do that, and then price does go away, and then you're going to be kicking yourself thinking, why didn't I get long in here? There was plenty of opportunities to make money, okay? So just something that you're going to have to, see what makes sense to you for your own trading in your own plan. If you see equal lows behind you and you don't want to get long, of course that's fine, you can wait for the sweep, but you just have to accept first that potentially you may miss out on a lot of moves where it does form those equal lows, but then price goes on, right? And it goes on for a long, long, long time, and then you've missed out on that, and eventually price may then come back down to sweep them at a much later date. Because remember what I was saying earlier is, liquidity will be there, and when price gets there, it will sweep it, but we never know if and when that will happen, okay? So that's why we react to it happening, and we don't necessarily try and anticipate it too much, okay? So let's do the daily chart. Let's quickly jump down to the 4-hour chart, and just take a look at a few more things. So actually, this kind of bullish trending price action is quite a good example of that sort of little mini lesson I was saying earlier, whereby if you're always waiting, right, for price to, so if I just draw this bullish trend, come down to our nice origin demand zones, but in a strong bullish market, right, where it's quite impulsive, price isn't pulling all the way back, then you're always going to kind of be left sitting there, scratching your head of going, why am I getting tagged in? So what is one way we can use to give us a bit more confidence that actually when price is pulling back and we have our zone down here, yes, we can look to buy here, but what can we look for to give us confidence that we can buy a little bit higher? Well, price can come down, it will start to generally build liquidity, something like this, right? People will think that the high low is in place, it will then come down, it will liquidate their positions, right? It will tap into that liquidity, then we get the sweep, right? We get the pullback in, and then that's where we can buy with a bit more confidence that we're ready to go, and we're not going to use this demand zone just yet. Okay, so we look on the 4-hour chart, and this is pretty good. We do come back into the demand zone there, then we get another break of the high. But what do we have? We have demand zones all the way down here. So let me just zoom in. Let's take a look at this. I appreciate these charts are very, very messy at the moment just because we have so many old drawings on. But anyway. So we get a movement up. Right, we come back down, we do tap into liquidity just below that minor low there, right, so you see that's enough to fuel that move, but it wasn't enough to break that high. So then what ends up happening is you build these equal lows here, all right, draw them on, 4-hour liquidity, there we go, nice fancy little line there just to show you, right, so we build those equal lows, and what happens? Price then comes back to pick up more fuel for the move, and then obviously what that theoretical concept would be is that big money knows there's going to be loads of sell stops below here, so then they can buy against that to try and reduce as much slippage so they can get in at this price level as better as possible, but obviously then that's enough demand to overpower supply, and it fuels the move to break out to the upside. Exact same thing, right? We pull back, We kind of build these relatively equal lows here. We tap into liquidity below that minor low, which is enough to fuel the move back up, but it's not enough to actually break the trend in this case. So then we build even more liquidity below these lows here. You see how there's kind of a mini double bottom there on the 4-hour chart, those two wicks. It'd obviously be a bit more prominent on the lower time frames, but definitely equal lows there. What happens then? Price comes back, sweeps that liquidity, right, taps into it. Obviously we have this daily demand zone as well. So what do we have? We have inducement in front of our daily demand zone. It sweeps liquidity. We now have these equal highs to target, right? Price then breaks those equal highs and it sweeps it to fuel the move to the downside again, right? Then what do? We build more equals, price comes down, sweep those equals, and it pulls back. We have larger equals here now with these kind of, again, remember, it doesn't have to be perfect equals. It can be relatively equal like that, but we know there's going to be sell stops building below there. There's orders building below there. Price then comes down, sweeps the liquidity, then actually taps into the 4-hour range that we have nested within that daily zone, picks up more orders from that demand zone, sweeps the liquidity for the inducement. We have all of this trend line liquidity to target and more, and then that ends up being enough to fuel that move to the upside. Because remember, the 4-hour switched bearish here, but this was just a daily pullback and a strong bullish trend. So what's happening is the daily then is pulling back, it's sweeping liquidity, picking up some more orders within the demand zone as well, and then we have loads of liquidity to target there to the upside, right? So on and so forth. We had that nice flip zone there, right? Supply turns to demand, price then comes back into that demand, right? Starts to build liquidity on a lower time frame, and then sweeps that liquidity, changes of character, pulls back into that demand zone, right? That would be a sweep zone on the lower time frame, and then we're off, right? Target these highs up here. We'll obviously tons of buy side liquidity building up above there. 4-hour chart here, the exact same thing again, right? What do? We start to pull back, we tap into the minor liquidity below there, which generates another pullback, but it wasn't enough fuel to break these highs here, so we start to come down again. But this time, there must be enough demand in that wick actually for price to go on and take out that high there. So what happens? Well, we sweep those equal highs, right? Inducement just before our daily zone up here. That's then enough liquidity to sweep back down, and we have equal lows to target. So price then takes out those equal lows, the 4-hour switch is bearish, tap into that liquidity, obviously demand as well. That's enough to fuel the move back up into the 4-hour supply zone, right? So we've taken the highs, we've taken the lows, pull back into our supply zone, nice high probability zone, and then we're off, right? External range liquidity generates the pullback, yada, 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 right? Equal lows building here, take up those equal lows, get the pullback after taking out the external range liquidity, right? So on and so forth. Yeah, and then we start to, build loads of liquidity down here. I mean, even if we look at, let's do a bit more kind of a sort of specific trade example, I guess. So, right, if you guys remember this daily zone down here, right, this origin zone, it was in fact actually a flip zone because we had this minor daily supply zone, right, that took out that minor low. So we have that inside bar, price pulled back into it, it tried to push lower, and then demand stepped in, and we had our daily flip zone. But it didn't get used straight away. So what do we know? We know it's still valid, and when price comes back to it, but price is in a bearish trend approaching previous demand zones. What do we know? They can obviously either produce a full-on reversal, but more likely, right, it's just going to be used for a potential pullback. For that move there. So if we look at when price first comes into this daily zone, was it around 7th of July? So let's just bring price back to around just as we kind of tap into it. So if it will load, come on into that. There we go. So here we go. So price is coming down, obviously in a strong daily and 4-hour bearish trend, and we tap into our daily zone. What happened before price tapped into that daily zone? You see how it built those equal lows, right? Price started to move away. What was it doing? It's just building inducement for price to then sweep, tap into that demand. So then big money can potentially step in to then either facilitate a pullback or potentially a reversal, either or, right? So what we can use is we can use that as confluence to increase the probability of playing those counter trend longs, playing that pullback or potential reversal. So let's jump down to the 15-minute and see what price action was going on to see if we can get kind of those lower time frame confirmations to help us with potentially playing that pullback. So you can see these big lows here, all these lows building up, nice big sweep of those lows, tap into daily demand. Now at this point, obviously, it's very counter trend and there's a lot of bearish pressure. So what can we do? We can wait for a change of character. Well, this one's a bit subtle, but you see this candle here, you see how it didn't break this candle's low? So what that means is price pulled back, it pulled up, and then it took the low. So there's a very minor low there, which means that this is actually a high. So as soon, or if and when we get a break of that high, that for me would be a change of character. Okay, so now we have the M15 change in character. The M15 is still bearish for me, right? Because that would have been the low. then yeah, that would be the highest point. So this for me is the high that would need to go for the M15 to actually switch bullish trend change. But for now, we've just had that change of character, right? So it's that first sign of a higher high that we may be starting to initiate that pullback and anticipate that M15 trend change. We also take out this kind of more prominent minor high as well. So that's a pretty good sign, right? We've taken out 2 levels now. So now that we have our M15 change of character, where could we look to potentially get in long? Well, we have the sell before the buy, or we can obviously refine it to the next candle that actually gets engulfed, right? So that's one valid way of doing it. Or if you want even more refinement, and if you are super strict in how you define your supply and demand zones, well, for a demand zone, technically it should be drawn on the last sell before the buy. And what we've drawn it on is the buy before the buy, right? So for me, this is valid, it works. But what you can do is you can then refine it to the wick, because it's very likely that there will be obviously a bearish candle on a lower time frame that then led to that move. Okay, so we've had our M15 change of character. We just draw it on there. And now let's see if price pulls back into our M15 demand zone to potentially look for long plays to play that 4-hour pullback. So obviously for price to come back down towards this zone, what did it have to do? It had to change character again and kind of switch bearish, which, you know, it's not the best of sign if we want to be getting long. So what we can do is wait for price to come into our demand and then change character again and switch bullish again, okay? So price is staying bearish. Now, even if you had, right, the zone unrefined like that, yes, we are tapping in, but we never actually get a change of character to the upside again. So even if you have a more unrefined zone, you can still wait for price to change character. Okay, we can start to see orders potentially filling up. All right, I mean, like, it's a bit more subtle, but it's happening still. Is you kind of have this trendline liquidity. People expect the third touch to then have that bounce, right? It will obviously be a bit more prominent on the minute time frames or the lower time frames, and then that is definitely counts as a sweep of liquidity. Then that fuels the move for a bit of a pullback. That M15 minus supply is trying to hold, and then let's see. So now, right, we have that change of character. So prices switch bullish again. I just draw on that M15 chock, there we go. So now, okay, this is a pretty good sign that it's time to buy, because we had that initial change of character there. We created some minor demand. Prices come back into our demand, right? We can refine it. We've swept liquidity, so we have inducement before our demand zone, and then we've had another change of character again, so we're back in line with the bullish trend. So now I'm pretty confident that this low is going to hold, and we can try and play at minimum or pull back up towards potentially this M15 supply zone, but we can try and anticipate that M15 trend is going to change, right? And we are going to break out. We are going to take out the high and break out to the upside to facilitate that steeper 4-hour pullback up into the 4-hour premium, up into potentially 4-hour supply, right? And potentially beyond. So at this point, obviously we don't just want to buy straight away as soon as we get change of character. We want to wait for price to pull back to value and into a demand zone. So at this point, what demand zone could you be looking at? Because if I draw some on, right, all of these are kind of valid. You could look at this inside bar. That could potentially be one. You could look at this sell before the buy down here. You could be looking, or maybe at the origin, right? So which one do you think is most likely going to, price is going to pull back to and have the highest probability of reversing and forming that higher low? Well, all of these are pretty much valid, and you could, have all three on. But what we're actually going to do is dig into the detail and see what zone actually makes most sense and see what is going on here. So if we actually look at where potentially a flip occurred, because that's obviously one way we can use to increase our probability. So we have the buy before the sell that took out that minor low, right, that last point of supply, and we can see that price came into here, into the candle. It reacted, right? And then what did we do? We took out that failed reaction there. But that never led to the change of character. But what I will say is, if at this point you were watching this live, right, and you didn't wait up until this clear kind of bullish move, and you saw price take out that failed reaction and then close up above here, yes, that is more than valid, right, then to get long here on that demand that caused the failed reaction, right? Obviously, it's more aggressive because you do not have a change of character at that point. But yeah, I did want to point out that that is definitely a valid trade. So let's say you wait for the change of character, like we've done here. Pricing comes up, it doesn't change character, it pulls back. It then mitigates this area of demand, right? And then that is what then fuels the move to actually get the change of character. So for me, that is a much more higher probability zone because it's mitigated where that kind of first failed reaction happens, but then it's where actually the demand actually stepped in to cause that change of character, right? Also, this is where it's a lot more subtle, but it actually took liquidity of these sell to buy wick. So obviously on a lower time frame, that would be a bit more of a prominent low, And what happened is price came down, it swept that low, it mitigated demand, and it led to the change of character. So this for me is a pretty decent zone. Obviously, price then tapped back in if you unrefine it back into the body to then fuel this move here, but there will still possibly be demand within this wick. So then what do we have? We have even more inducement with these lows here, right? It's subtle, but it definitely counts, and this does improve the probability of those zones. We then obviously took the liquidity below that sell to buy wick there, right? So you can see that we now have a sweep zone. We have inducement above it, and this is the zone that mitigated, right? So it's the last bit of mitigation. So we're following the order flow. This is kind of the last fresh zone, and it's what led to the change of character. Now this zone here is still valid. Why? Because you could have a bit more unrefined, where you take the entire range. Let's draw that to the high, right? And yes, technically price did pull into that range, move down and go. But when you compare that to all of the confluence that's sitting with this zone that we've just gone through, for me, that is a much higher probability zone if you want to take that. So if we play price forward, now you can see for those reasons, right? Because that is where the flip occurred, but then price came back in, mitigated it, swept the sell to buy liquidity, that then fueled the move to actually lead to the change of character. Price did come back in and mitigate the orders if you drew the zone from the body, but then what we can do is obviously then refine it to the wick. That move then produces inducement into the sweep zone, and boom, that's why you see the orders filled away. Now, I do want to make one other crystal clear point here, is this is again why I made such a big song and dance about this before talking about liquidity when we started digging into these lessons, is this is very, very, very subtle fine-tuning that you were doing to just kind of help you really bring your trading to that next level. But it is not necessary, it is not required, okay? It's very, very subtle, sort of nuanced differences a lot of the time, but it's just trying to, give you that complete understanding of what is going on and can help you to try and pick the right POIs, right, the right demand and supply zones, the right areas of value that you may want to be looking at trading in, and just give you a bit more confidence if you want to be the trader, right, that then trades on these M15 zones, and you may have multiple zones and you're not sure which one to pick, right? Obviously, ideally, we always want to be getting near the origin because we're in the best value, and then if we're wrong and we're stopped out. But this can be how you can have a lot more confidence of picking ones that are slightly higher up in the leg, right? Look for the ones that cause the flip, that cause the change of character, that took liquidity when they were created, and then that have inducement in front of it to induce sellers, right? All the sell stops below those lows for then the big money to buy into, okay? Let me just get rid of those drawings there and then put this back here. So let's have a nice 2 pip stop. So at this point, what do we have? Well, if we jump back up to the 4-hour chart, not that one, that's the one I want, and wait for price to load. So if you remember, right, we had that 4-hour break of structure. There we go, that's loaded. We had that 4-hour break of structure that took those equal lows. We tapped into daily demand, so we swept that liquidity, and we were looking to play that pullback, potentially up into 4-hour supply. So it's quite a big 4-hour supply zone, so I'm just gonna kind of refine that to the wick, right? And potentially we can look to target price up to there, and then potentially look for a lower high to then come back down towards these lows down here. So let's play this forward a little bit. Again, not going to talk too much about management. We can talk about that at a later date. But for now, it's just understanding, where price is most likely to go. If price will now load my drawings. There we go. So yeah, we could, roughly just target back up to 4-hour supply. And then let's just play this forward. So at this point, what I'd be looking for, I'd be looking to see, is supply going to hold, or are we going to get that M15 breaker structure to the upside? Obviously, in this case, we eventually do get that. So we can just put this on here, and then let's play this forward for a bit of time. So big, nice swing move up. Obviously, we then initiate that M15 pullback to form that higher low, and then we continue to the upside. So really what we want to be looking for is price to then pull into supply, and then we can start to look for signs that price is starting to break down to the downside, and then we can potentially, that can give us an indication, right, that the 4-hour lower high may be in place. So still pretty much bullish at this point, right? It just formed another higher low. Now we're tapping into supply, so this is where really got to start. In the live market, I would have my alerts, and the moment we're in there, I would really be paying attention to what is going on at this point. So, but pulling back, this for me would be the swing low that I would want to see broken to get a confirmed bearish trend change. Obviously, not just a change of character, but an actual trend change, and that would be my high. So we are starting to get changes of character here. So yes, it is definitely more than valid to start looking for shorts within here, okay? Let's just play this forward a bit more. So at this point, right, what I can now see, okay, so we still haven't taken out the low. If I just zoom in, is we tapped into 4-hour demand. We have run the liquidity above these highs here. We have had our change of character. We've then mitigated, right, the extreme supply zone there. So if I draw it on, right, we're starting to get a series of mitigations, which is what it's showing us bearish order flows starting to kick in, right? We then take these lows here, we pull back into supply, then we continue back down. Now what we've done is we haven't taken out the low, but we've started to build a nice double bottom. So the M15 is still bullish, of course, so it could just reject demand and we could shoot up from here. So let's see what happens next. Price forward a little bit more. Okay, so now we can see that it's failed to take out those highs on that first go there. And again, we have another mitigation where supply is starting to hold. So we're seeing those series of mitigations, right? We can see this trendline liquidity got absolutely smashed, right? Anyone selling that trend line, boom, sweep into liquidity, inducement for the supply zone, and then we retrace. But what do we also have? We have these big equal lows. You can even include this in there as well, sort of almost a triple bottom for price to potentially target and sweep. And then we get price breaking below. We now have the M15 confirmed switch bearish. We've had those series of bearish order flow kicking in, and now we've had a break of structure. So at this point, I'm thinking, okay, we've mitigated 4-hour supply, right? We're with the 4-hour and bearish daily trend. We've now had a confirmed M15 bearish trend change. So now all systems go to look to want to get short. So what we can do is we can mark on our premium discount. Clearly, we want to be ideally selling up in the premium. All right, and there are two kind of obvious levels that I would see to sell at. One would be this pretty clean push here, right, from the supply zone where we can see a lot of money stepped in to take out those lows. And then we have this one just above with the extreme, okay? So I'm just going to rein this in a little bit because obviously we've had these series of bearish order flow. Price shouldn't really come up above this high here if it is to remain bearish. Now, out of these two zones, which one do you think is the highest probability? Because they are both more than valid and you can, whack a limit order on both. But if we want, we had to pick one and we are going to use the liquidity concepts that we understand, right? Which one is going to be better? Well, let's go through this slowly and look at how those zones were created. So obviously we had this bullish internal move come up. We then created demand, right, with this sell before the buy. So then if we drag that across, what happened? Well, price went up and then came back into demand, but it just smashed pretty much straight through. And it wasn't until it swept that low here that then price pulled back up, right, to close that bullish candle here. So for me, there isn't a reaction there, right? Remember, the reaction is key because you want to see that exchange between buyers and sellers. But for me, there wasn't one. Price just smashed straight through. Okay, so that's not great. So for me, neither of these zones are flips, in my opinion. Now, what I already can see I like about the top zone is that that is where the move that led to that first initial change of character, right? That took out that low there. What do we also have? Well, when that zone was created, was it a sweep zone? Yes, because it took out those relatively equal highs there. Obviously, it's very, very subtle on the M15 time frame, but what we are doing is we are fractally reading what would be going on the lower time frame. Because on the M1, what do you think? That would be a nice big double top. That price is then swept. It's then retraced. Big money has stepped in, right? Because what's happened is price has tried to break up above those highs, and then boom, it's got slapped back down, right, with those big sell orders that then led to demand getting that change of character. Now, ideally, we would have got a flip here as well, but obviously that hasn't happened in this case. So I'm just going to delete that for now. And then we pulled back, and then we obviously created more supply, and we went to the downside. But what I don't like about this is a couple of things. One, well, what I do like is it did lead to the break of structure, which is decent. But one, it's a very, very clean push, right? There's no inducement near this zone within the leg. So what can often happen is that can be used for inducement for the zone above. Also, it's not really technically a sweep zone. Yes, it did take the liquidity of the inside bar range, but for me, that's not as significant as taking kind of the actual kind of larger range that formed here, like it did on the previous one. So for me, that's left equal highs to be inducement for this zone, which did actually sweep liquidity, which was a sweep zone, okay? And this is a clean push, there's no inducement above it. So if I only had to pick one, I much prefer the top one. Also, it's the extreme, which is obviously ideal as well to be looking to sell from. So let's see, we start to get a bit of a reaction, and then price spikes up, and it sweeps that liquidity above those highs there, and then that leads to the retrace. So, okay, we might not get tagged in, but at least we used that confluence to potentially avoid a loss of us getting spiked out. Price still hasn't come up lower, right? This high here has failed to do what? It's failed to do its job. It's failed to take out that low. So what does that tell us? That tells us that this zone here is going to be run, most likely, obviously not guaranteed. It's most likely going to be used for liquidity, right? For inducement for this zone above. So now we have built inducement right, for price to tap into here. What do we also have? We also have all of this trendline liquidity to target. Okay, boom, 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 and now we, really good trade to then set your limit order and take this trade short. So just like the long that we took, I'm just kind of showing you the conservative ways of trading here, right? There's obviously we can jump down to the lower time frames to get a much more refined and high. Let's be conservative here. Let's go 6 pip stop. All right, yeah, that's on the distal, and then because remember this is pro trend, we're trading from the 4-hour extreme. Right, we've got all of our confirmations, the M15 switch bearish. We filtered out our 2 zones using liquidity concepts, right? Which one was a liquidity sweep zone, right? Which one took liquidity to form the zone, and which one had inducement in front of. Obviously, the one above had a lot more going for it in terms of that. Now we're sitting at the top. So what that should tell us is that this 4-hour swing low here, right? It's failed to take out the swing high. So now we have all of this confluence, right? This low should be getting smashed. It's a weak low. It didn't do its job. So now we can hold with confidence at a minimum down towards this low here. What also do we have, right? We have those relatively equal lows for price to then tap into and sweep that liquidity. We obviously had all of this trendline liquidity here building as well, right? It's literally everywhere in the market. So let's just play this forward and see if those lows get run or not. And boom, that low gets run. So there you've got 15 are there, depending on how tight your stop was. You may have been a bit more aggressive, with a 5 pip stop. So anywhere between sort of 15 to 18 are there. And then here, even just up to 4-hour supply, you had over 40 are there. So insane amount of risk to reward with very hands-off trades over the space of from the 8th of July to the 13th of July. So about a week's worth of price action. Buying the bottom, selling the top, right? You just waited for all of that confluence, nice and patient. On the M15 time frame, don't even have to go any lower. Obviously, you have multiple POIs that you can potentially set limit orders on, but just using those 2 sort of main concepts that we use with liquidity. One, the liquidity sweep zone, right? Which one took liquidity in order when it was formed, and 2, which one has inducement in front of it to induce buyers or sellers, right, for the big money in theory to potentially be using to then increases the validity of those zones that we are looking at, and then obviously using our knowledge of market structure, weak highs, weak lows, liquidity to target in order to help us with our management decisions. Okay, right, hopefully now you can start to see how, yes, liquidity can be subjective. You can draw on these lines everywhere, but how we kind of not forget about that, but we are concentrating on the concept in a very, very mechanical sort of and refined way of really just helping us to refine our supply and demand zones even more, and use it for areas to target, right? That understanding that every time we take out one of those key structure points in the market, yes, we're not expecting price to take out this low and then flow in reverse, but we understand we're in a trade that it's likely when price takes out that low, it's likely we're going to get a bit of a pullback. Of course, we never know how steep that pullback is going to be, or it's just going to be a little bit of reaction, but it's having that knowledge that when you are in a trade, when you see structural lows like this, right, it's very likely we're going to get a pullback. Of course, it doesn't happen straight away, but it's just having that knowledge. So whether you want to take some partial profits here, just in case you don't want to hold a steep pullback, they're the sorts of areas that you can start to look at, right? So on and so forth. So I'm going to leave that there. I'll tell you what, let's look at just one last example on EU. Is a pretty good example. We have looked at it, I believe, before, I think, in some of the examples in the lessons, but it was just a really, really good example of liquidity in action. So let's sync up these timeframes a little bit. That should be my weekly chart, that should be my 4-hour chart, and then let's get this all to load, if it will load for me. Right, okay, got the 4-hour chart to finally load. So okay, the area that I want for us to just quickly focus on before we wrap this session up is when price, obviously we just looked at the trade example here where we played that pullback from the daily zone into 4-hour supply to then run that low here. And then what happened is we filled up more orders. We actually tapped into the 4-hour refined zone within here, and then that led to a nice big bullish breakout, as we can see on the 4-hour chart, right, where the 4-hour switched bullish. But remember that whole time, this is our daily swing low, right? This is, daily swing high. This is our daily swing low, and that 4-hour bullish trend change just could be a bit of a daily pullback, right? More into premium prices, and then this 4-hour high that we broke, that can just be used potentially as liquidity, right? That trendline liquidity as well, just for price to sweep and then fuel that next move to the downside. So on the 4-hour chart, obviously price, just zoom into it, did switch bullish to do that. But then let's actually dig into this a little bit more. And this is what you can do, right? You're not going to have every single little zone drawn on, right? Because of course there's going to be loads of kind of fractal zones within here. But like I've tried to say kind of throughout the lessons, is you don't have to be, you know, Mr. Miyagi and guess exactly which one price is going to react to. You can just let the market do it. Of course, you can try and anticipate and have them drawn on, but if you want to keep your charts, you know, reasonably clean, especially in the live market, that is something I would advise. What you can see is when this sort of price action happens, we can see that we broke out from the 4-hour high. We know after a 4-hour break of structure that we expect a 4-hour pullback, but we're also aware that, you know, this could have just been a daily pullback to form a daily lower high and go. So we have to be aware of that in the back of our minds. Now, when you see a nice big bullish candle like that, that instantly gets slapped down in the next candle and fully retraces, and we get a pretty convincing change of character there, which we know what is going to be most likely a M15 bearish trend change. And then we understand that, you know, potentially a daily lower high could be forming. Now the 4 hours showing signs of weakness. That can give us pretty, you know, a decent sort of idea to potentially be looking for shorts to play that full-on reversal. Now, of course, the 4 hour could just pull back, right, into demand for form a higher low, and we could go and the daily could switch bullish, of course. So we do have to look for longs as well. But this is just, you know, a good reason to understand that although you are trading against the 4 hour bullish trend, if you are looking for shorts in this area, it's understanding because of all of the multi-time frames together of why actually it's not too aggressive trading against the 4 hour trend, because you are anticipating that that could be the daily lower high and we could be going down to run these weak lows, because you can see how the low formed here, right? All of these wicks here, it's quite a weak way of forming a swing low. Generally, when you see a swing low, it's a sharp pullback like that, right? When it's like this, why is that a weak low? Well, one, it's obviously moved away very, very slowly. But two, look at all of the liquidity that's going to be building below kind of all of these relatively equal lows. Tons of liquidity that price is going to want to come down and sweep, okay? As you can see this, sharp move away. That's a bit more of a sign of a swing high, because big money has stepped in to do that, right? So anyway, let's take a look at this kind of area here and look at how we could have traded that short. So let's hop down to the 15-minute time frame. And I promise this will be the last example that we look at, but this is a really, really, really key one. So this M15 bearish breaker structure to the downside was obviously that 4 hour change of character, and then we kind of had multiple supply zones, right? Whether you have it refined or the wick or whatever that we could be looking at to trade. So see over here, right? What do we have? We had relatively equal lows there, right? So just looking at what facilitated this pullback after we got the break of structure. And this is what I mean. You don't have to have every single zone drawn on. You can see price start to pull back and go, okay, I'm going to look left. Does it make sense what we're reacting to? What we're reacting to? Well, we are reacting to this M15 demand zone here, right? We've tapped into that demand zone. How was that demand zone formed? Well, it swept these lows here, right? So it's a sweep of liquidity and a push up. Now prices come back in, and that's facilitated the pullback. So we have this supply zone here to look at. We have these supply zones here to look at. So what's one tool we can use to help us pick kind of or filter out the zones? We can use premium and discount. Okay, so this one's pretty much in the discount. It's not ideal. Price pulls back into it. It has a bit of a reaction, right? But it's not enough. It's just to facilitate, you know, that substructure pullback to then continue that move on higher, right? So we sweep those lows, and then we continue to the upside. So then we can start to look at our refined zones up here. Price taps into it. We start to get that change of character again to the downside. Old internal demand zones just, you know, facilitate those pullbacks, but it does what? It fails to take out that low. So technically, although we are rejecting supply here, that technically should be a weak high at this point. Remember, this is the swing high that we are within. This is the swing low, right? Now prices come down. We've kind of tapped into this demand zone here. Just drag it across, and now we're starting to pull back. So we do have this supply zone here, but we do have to be aware that it is a weak high. But in this case, supply does actually hold, and then we continue to try and push down, and we run all of this sort of trend line liquidity here, right? We tap towards these lows again, but demand starts to hold, right? That internal demand. We get here, if you look, right, we get that pullback, that break of the low, so we get a minor breaker structure to the upside. We get that change of character there. Price then pulls back into demand. We build these equal lows, price sweeps those equal lows, we come up, right, we take these equal highs, we then pull back into demand, right, so on and so forth, and then we reject, I believe, these buy to sell wicks here, that took out that inside bar, right, and then we get another move there. So I'll just show you, get rid of those drawings, right, sweep of the equal highs, equal lows to target, so we get that FU sweep, right, the sweep of the highs, we push down, we pull back into it, that's your sweep zone, and then boom, we finally take the low there. So at that point, when we get that M15 break of structure, this for me, if I just circle it, becomes my new swing high. Why? Because that was the highest point in the pullback that then led to the break of the low. So what also happened, right, this whole time when we were bouncing from demand, because it's against the trend, all it's doing is just generating that sell side liquidity, right, with all of these equal lows for price to tap into, to sweep, to facilitate the pullback, right? Now, in this case, it did actually have a very, very aggressive sweep, and it tried to do what? It actually tried to reverse. It tried to break out higher and take out our newly formed swing high. Now, if you're looking at this in the live market and you see this, what I would always recommend as well is you always set your alerts on the pair that you're trading on your kind of key structural swing lows and swing highs. So this is when your alert would then go off. You see price trying to potentially break out higher and actually form a higher high on the 15-minute chart. But then what happens is price closes back below with that M15 candle. So what is that? A really good sign is that we've just swept those kind of weak highs that had built before. We've tapped into all of that liquidity and now we've retraced. I remember what I said about sweeps. We want to trade away from them, not into them. So when you see that sweep, you see the failure to close above the high, you see price retrace back inside, that is a really, really good bearish sign to look for shorts, because we are still pro trend. Remember, we haven't had a candle closure above, so the M15 is still bearish. We've had that sweep, we've had the tap into liquidity, we've had the tap into our supply zone. Now it's all systems go to try and run that weak low, because that weak low failed to do its job. Yes, it wicked the high, but it failed to actually cause a true break of structure. Now, let's actually dive into how we potentially could have traded this. Now, I made this kind of point before when we originally looked at the supply zone that, if you didn't have this drawn on, I probably wouldn't have had it drawn on. I probably would have just left it at the more obvious swing point zone there. But if you see what we just saw, right, which is where the M15 candle goes up and then it violently retraced back, and you see, okay, well, it just missed my supply zone. You don't have to go, oh, well, I'm not going to trade it until it hits it, because what you can do, as long as, of course, you get your lower time frame confirmations and your entry model sets up, it's just looking left and investigating, well, what is price reacting to? And that is where you can then see, okay, well, we do have these sell to buy wicks. All right, that makes sense. What do I like about it even more? Well, we had these buy to sell to buy wicks here. All right, remember we looked at this before when we were looking at flip zones. Okay, that does make sense because we had lower time frame demand that then made that higher high. Price came back into that demand. It tries to do its job to make a higher high. And then we flipped, and that flip led to that break of structure there. So actually, yeah, it's a pretty decent zone. Maybe I didn't have it drawn on before because obviously it's quite, it's quite a nuanced zone. Then I see price tap into this high. It fails to close above, and it violently retraces. Okay, that's a pretty good sign now that this week is a weak low. If I get my lower time frame confirmations, I'm then happy to take that entry after all of this liquidity has been swept. So let's jump to the 1 minute. Hopefully it will load for me. There we go. Okay, so as you're looking at this live market, right, as price is starting to approach your high here, what is happening? Well, already I can see these beautiful, almost triple top equal highs being built. And what is that? That is inducement before the zone. So M1 liquidity, there we go. So let's play this forward a little bit. Just going to zoom in so we can actually see it. I mean, even here, just to fuel this move to the upside, right? You can see it again and again. We build these equal lows. Price sweeps those equal lows, right? Moves to the upside, pulls back into demand, and then that fuels the move to run those highs there, right? So come into our demand zone, not thinking anything too special as of yet. Right, okay, tapping a few more orders, trying to break up above that M15 high. Okay, maybe potentially we're starting to switch bullish. Okay, boom, right? It might not look like much, it's probably only about 5 or 6 pips, but that takes a hell of a lot of money to do that in one M1 candle. That is big orders being filled. We now have an M1 change of character. It's a bit more subtle, but it's that inside bar is a minor pullback, right? So now we have an M1 change of character. So I'm thinking, okay, I'll be looking at the 15-minute chart. I've seen that the 15-minute chart is now retraced back inside. I'm understanding that that M15 low that we looked at all the way down here, right, is probably a weak low. So now I'm just going to look for, can I get my flip and chock? Well, we've already had a chock. We're pulling back into the area of demand, right? So whether you take the whole sort of range here, or whether you take just a single candle, right, it doesn't massively matter. So let's draw it across and see, is there going to be a reaction here? Because we could react to here, we could react to here. It doesn't massively matter. The way that my thought process works when I'm looking at this in the live market is I'm literally just waiting for price to start to move to the upside, right? Where is the demand going to step in? And then I will look left and go, it doesn't make sense, right? So let's see. Okay, price is reacting to this level of demand. So whether you took the whole range or whether you took the candle, it makes zero difference in this case. So now, as soon as I see that bullish retrace, I see demand holding, right, that exchange between buyers and sellers. What am I going to do? This is literally what I do in the live market. I'll draw my line across from the reaction point, right? And I'm saying to myself, we've seen that change of character. We've seen price react. So now as long as we don't take out this high here, right? We've swept liquidity. As long as we don't take out this high here and this reaction fails, right? That's all systems go now to look for that chock and flip entry. So that demand's holding. Okay, maybe it is going to work. Maybe it is going to make a higher high. Okay, it's wicked the low. So if you're using, if you need to see a candle closure below like type 1 mapping, that won't be enough for you. But for some people that will, because what that will essentially represent on the 15-second chart is price probably did break and close below, and now it's pulling back into that demand that did it. And this is why when price wicks it and it pulls back in, you can literally, hit sell, smash sell in the market, and you could be in the trade already. But maybe you want a bit more confirmation and you want to wait for a candle closure below. So maybe you're going to think that's not enough for me, because what can happen